Hello, this is Rich Morrison, and this is my latest edition of the Thinking Cap, where I want to cover a little bit more on ECO. We'll call this the last call for ECO this year. The deadline to make decision on adding ECO or changing ECO coverage, like every other decision for most states, is March 15th. So we've got about 10 days left to make that call. Why do I think ECO is a big deal this year? Well, number one, it was increased the number of crops available this year. But most importantly, the government did increase the government copay from 44 to 65% on ECO. So it's going to allow producers to get more coverage up at the top end to try to cover cost of production this year, but also to utilize as a marketing tool. And so I've been calling this the blue light special for the year. I still think it stands out. It's getting a lot of traction in a lot of places that haven't looked at it before for a variety of reasons. But ECO, if you're not familiar, it starts at 90, or excuse me, 86%, goes up to 90 or 95%. And so producers can look at different ways to build their program or build their ladder this year. I think it starts in the middle here with what do you elect at the FSA office? The county ARC program certainly looks attractive for several crops because of those increased prices. Then, to me, you figure out how do you want to protect yourself on your own farm at the bottom. Then, do I consider adding this ECO band at the top? Basically, how high on the ladder do I want my top rung to be? And so this year, things have kind of lined up, I think, to really make this product something to worth looking at. So if you're not familiar with ECO, this is our updated indemnity worksheet and matrix. Take a look at this for agents that are on here. This is on our agent portal for producers. See your NAU country agent. We can get you a copy of this. But basically, this walks you through the math. I like math, like to see the math. And so every revenue policy is going to use the higher of the base and the harvest price. So this is an example of we started at 470 corn. What if we go to last year's fall price at 416? So if price goes down, then we take that times your APH to come up with your expected value of your crop, multiply that by your band, which in this case is 9%. That gives you the value of that band, $84.60. You can elect to have a smaller amount of that band. You don't have to have the whole band. You can take that down as much as 50%. That would decrease your premium, but it would also decrease the amount you would get paid in the event of a loss. So if we follow through to the loss calculation, I'm making the assumption that the county yield doesn't change, but if we see a price drop like we saw a year ago, then that means we would end up achieving 88.5% of our expected revenue. We subtract that from 95, our trigger, which means we had a 6.5% revenue loss. We divide that into the band to come up with 72.2%. So we multiply that by the green box, our dollars of coverage, which means we get paid $61 an acre. So this is just a pretty common thing, I think, that we could look at. We don't know what yields are going to do this year. I make the assumption we're going to be unchanged. But if price drops, and you can make that case, and we'll make that case on corn here in a minute. If we have big acres, price goes down like it did last year, that's how this thing kind of works, like a put option. And so the matrix is going to show me 200 plus examples of combinations of yield across the top and price down the left-hand side. And the one I'm starting to look at here is what if we have 100% of our expected county yield, where do we start to trigger a payment? Well, 446 would be over a 5% drop in price, and we would start to trigger a payment of 93 cents. And so we'll look at markets here in just a second, but that is primarily the reason I like it today. Now, ECO is going to give you a lot of ways you could end up getting paid. If we had a 5% bushel drop in the county and the price goes up, now you see your coverage goes higher because we're multiplying by a higher harvest price. If we lose both or price continues to work down, even with a good yield, this county could have a 205 bushel yield, $4 corn, you're still going to get more than your money back that you invested in the policies. So why is it a big deal? Well, I think on corn, especially, if you look at the Ag Outlook Forum numbers from last week, this kind of got the ball rolling with the downside of the market. But USDA came out with a 94 million acre projection with a 15,585 crop, 17 plus billion bushels of supply. Even with strong demand numbers, they're very strong with feed demand, ethanol exports. They're still talking about ending stocks pushing up close to 2 billion bushels at the end of next year. Now, yes, this assumes 94 million get planted. This assumes we have a trend line yield, but they're projecting an average farm price at $4.20. My numbers that I've been using are the second column from the right. I still think there's a good chance we revert back to last year's acres at 94.6 million, maybe not as big a yield. I don't see that the feed demand is going to be where USDA is because I don't think we have the animal numbers, both in poultry and in cattle. So I fudged that number down. I do think ethanol and exports should be strong, but we're talking potentially well over 2 billion bushel carryout. I don't think the third column is likely, but if you push back to the 2012 record, if farmers have a lot of cash in their hands because of some of these payments that are coming out here at the end of March, who knows? And so then you're talking about big jump in ending stocks potentially. So what do you do to protect against that? Well, the other thing you have to protect against to me is the funds. And we've talked about this for 60 days now that the biggest risk I think that the corn market has had is this major long fund position that they've built and didn't see a reason why they would liquidate it quickly. But we've given them a couple here in the last week. Number one, the Ag Outlook Forum number. Then we had the tariff stuff going on this week, and funds have been big sellers, and they've still got more to sell if they decide they want to get out of the market. And so it's been a roller coaster ride, certainly with December corn. We were very fortunate to get the rally that we did when we did and have this base price set at $4.70. And now here we are as I record this, we're at 445 and a quarter. And I showed you on that matrix a minute ago, 446, actually 446 and a half is a 5% drop in price. So if you go into the year assuming we're going to have an average crop, then a 5% or more drop in price is going to trigger a payment. Well, guess what? We're in the money right now with where the prices are at this morning. And so even though the market is oversold, yeah, we're probably due for a bit of a correction back to the upside. I don't know where we're going throughout the rest of the year. But if we get 94 to 95 million acres planted, get a good crop, you get to 2 billion bushel carryover, even with strong demand. Can you take prices back to where they were last fall? Sure, we could. And so that's why I think ECO is making a lot of sense. And most of us are not going to sell corn right now. If you miss the boat on the rally, we don't want to sell it today. What else can I do? Well, I can still add ECO as basically a put option between now and March 15th. And so this was something I had talked about a few weeks ago in the market report. We had looked at a lot of different alternatives besides just flat selling corn when the market was rallying. We looked at minimum price, and at that time, corn was 476. We had looked at put options, buying a put, selling a call, three-way option trades. But again, we talked about ECO as basically a price put when using the base price at 471, and that would have triggered at a strike price at 447. So I really think this makes a lot of sense for most producers. Soybeans, I can tell you a lot's going to depend on South America this year and every year going forward. But the forum came out with acreage at 84 million. They were strong on crush demand, not so strong on exports, taking stocks down maybe to 320 million, but they're still thinking an average farm price down a dime. I think acres could be a little bit smaller, maybe back to last year's number. The export demand number, I don't see as good as USDA does, given the fact that we've got such a huge Brazilian harvest that's coming on. So probably stocks somewhere in the 300 to 400 million range. So that's pretty neutral, but I do really think ultimately if you buy this on soybeans, it's a Brazilian hedge. You're factoring that what if Brazil increases acres this coming year, like they've been doing every year, and if they have a decent crop again next year, could you be looking at another record? The funds have liquidated most of their length. They had put on a long position a couple of weeks ago. I think they all looked at each other and said, "What are we doing here?" your long beans ahead of a huge Brazilian harvest. And so they've liquidated. Now they're probably on the short side of the market, but would not be a shock to me to see them continue to play the short side of the market in soybeans throughout the year ahead. So November beans, kind of like corn, we had a bit of a gift rally that USDA gave us from the January crop report. Market held up well enough through the month of February that we set the average at 1054. Now we're down about 4.5% from that price here this morning. So maybe not quite in the money if you have an average yield, but pretty close to it. And so I do think that ECO makes some sense for soybeans as well, especially as a hedge against Brazil. And, even if you just go back to the December low, you'd be down well over 5% at that point. So to me, how do you build your ladder this year? How many rungs do you want on the ladder? How high up do you want that top rung on the ladder to be? That's the question you've got to solve over the next 10 days. I think there's a lot of different ways to go about this year, but certainly the county ARC program looks to be good protection in the middle. Utilize that money that you might have spent on SCO in past years to get yourself some extra coverage at the top, really to utilize that as a put option. That's the way I'm looking at it here for this year. So thanks for tuning in to this latest edition of the Thinking Cap. If you've got any questions, feel free to shoot me any notes, and hope you have a great finish to the sales season. Take care. We'll talk to you soon.